So I might sound a little cliched if I say that we've got a diverse set of panelists for this panel, but it won't be a cliche at all if I say that the topic that we have at our hands, the single specialty, is diverse in itself. So while the single specialty themes such as eye care, dental care, oncology, they represent the overall healthcare sector at large, each of these themes are distinct in their own ways that they can beautifully stand on their own. So we have Rohit from Cloud9 Hospitals, which is the most heavily funded company from the mother and child care segment, and which is revolutionizing the way birthing is done in the country. And it should also be noted that a couple of other companies from the space have also attracted significant funding. Then from the fertility side, we have Kiran Gadela, which has gotten funding from India Life Sciences Fund 2, which is managed by private equity firm, which has backed companies such as Gland Pharma, Oncology Chain, Healthcare Global Enterprises, as well as an eye care chain. And while we don't have representatives from the other teams, it's great that we have someone from the consultancy and the advisory side, Kaustav Ganguly, who is the managing director of Alvarez and Marshall, who can give us an overview of the single specialty theme, as well as do a deep dive into some of the single specialty segments. And last but not the least, we have Srini from People Capital, which has already dabbled, if that's the right word, in the single specialty segment by investing in motherhood, and you've also exited. So you can give a face-to-face view to Cloud9, since you've already dabbled in that space. So warm welcome to all of you. So I thought I'll start by, before we dive into the topic on when single specialty themes are going to break out, I thought we'll talk first about the state of the play. Where does single specialty themes stand now? So I'll start with, Kaustav, if you can give us an overview of how the unbundling of the multi-specialty hospitals took place, or the evolution of the single specialty themes, and what are the specific factors that make for a case to cover single specialty from a multi-specialty segment?
Sure. Thanks, Joseph. When I think of single specialty, there are 3 or 4 key factors which allow a single specialty model to stand on its own 2 feet, right? The first one is really around a single specialty model not having a clinical acuity or a dependency on too many other specialties, which is something that you would typically get only within a multi-specialty hospital setup, right? For example, if you were to look at eye care, or if you were to look at dental care, typically those are examples of specialties where the follow-on clinical complications or the dependencies on other specialties within a hospital setup are quite limited. And therefore, they can actually stand on their own 2 feet and be carved out of a multi-specialty hospital setup into a single specialty model. So that's point number 1. Point number 2 is really around the fact that that single specialty model has to have a very compelling proposition, both for patients as well as for doctors, who are the key stakeholders in the ecosystem, right? So compared to the kind of lives that they live inside of a hospital, the doctor has to find it meaningful and compelling for him to be able to work in a single specialty setup. Same thing applies to the patient. So is there a very compelling proposition by way of better turnaround, better efficiency, greater service that you would get in a single specialty kind of a model versus in a multi-specialty model? So that's the second thing that kind of helps a single specialty stand on its own 2 feet. The third one really relates to access, right? So if you were to look at something like dialysis, right? You're essentially talking about a very small proportion of the overall number of patients with end-stage renal disease actually getting access to the service today. And there are only so many asset-heavy hospitals that you can roll out, right, within a short period of time. Versus that, a single specialty model, especially if it's asset light, it's capital efficient, it's easier for you to do a cookie cutter, roll that across multiple geographies, and therefore, have a proposition around access which is, typically going to be very difficult for a multi-specialty hospital to offer. The fourth point, which is, from my perspective and from investors' perspective, the most important point is that, it has to have sustainable unit economics. Right? So a single specialty model has to have some advantages by way of better patient funneling, revenue capture, potentially lower, operational costs and capital efficiency as well, which should ideally make that box, financially more attractive and viable compared to its operation inside of a multi-specialty setup. So that's really, how I think about, 3 or 4 of the key factors that kind of, help a single specialty model be carved out of a multi-specialty setup and stand on its own 2 feet.
So we'll talk about unit economics some more. And before I get the private equity perspective, I'd like to ask Rohit about the kind of private equity funding that you've received so far. How have you deployed? Where do you stand now? And what has private equity folks brought to your table?
Thanks. So, you started with that saying we're the most heavily funded, so it's a good thing. So, no, I think we were one of the first few ones to be off the block in terms of showing exactly to what Kaustav just shared, that there is a scalable proposition when you dig deep and get focused. So I think we took about 5 years initially. We started in 2007. Till about 2011, we didn't do anything about it. We just tried to dig deep and understand what works best, what doesn't work best. And 2011 is initially when we raised our first capital, external capital. And from then on, we've been able to raise, so 2011 was with Matrix, 2013 was with Sequoia, and 2015 was with True North. So I think what we have largely benefited from is to actually be a bit fearless about taking certain decisions. I think not having someone having done this in the past leaves a lot of open questions, which means you have to go figure things out yourself. So not everything will be the greatest of decisions, but then that's what this would allow for you to do. So for example, now we worked out what is the scalable model. What we thought works 4 years back is completely different to what we feel works now. So, and that has been working really well from what we were able to look at. I think the kind of discipline that we've been able to bring about from corporate governance, the kind of discipline that we've been able to bring about from how teams are brought in. I was just sharing off stage about the kind of people we've been able to attract who are non-healthcare. I think that also is a significant impact about being able to bring in very good talent, not necessarily from within the industry, because that just gives you a different perspective altogether. So we're fairly excited, and I think we've just got our feet, cemented well, and it's just bound to do very well from here on in terms of how all the investments that we've laid out so far on how this is going to yield. In terms of size, we are already at about 20 locations across 7 cities in the country. And we have plans to add about 3 to 4 units every year as we keep growing. And we stay true to the fact that, what we do between mother and child is something that we're going to learn more and stay focused on this. Because the minute we start deviating, I think we start losing the ability to learn and implement faster. So we're going to stay true to that.
Cool. Coming to Kiran, the founder of Oasis Reproductive Center, you've raised the first round of private equity funding from India Life Sciences Fund 2, managed by Investment, which has already backed some single specialty themes. So you've got some good pros there. Tell us your experience with this private equity folks so far, and what have you done with their money so far?
Thanks, Joseph. Firstly, I'd like to talk a little bit about our company Oasis. We are 9 centers in operation, IVF centers, single specialty centers. We bootstrapped our venture in 2009. We founded it at that time, and in 2016 is when we raised the first round with Investment. 3 things really, which actually have sort of helped from a PE standpoint. One, validation. Fertility that we saw was a very, very unorganized segment. We still see a lot of clinics that are there, the single clinics. We wanted a validation for the institutionalized practice that we tried to bring in, which was our main focus. Number 2, helped us in our leadership hiring, the positioning of the company. More than the money, that was quite important. And the third thing are the right structures and, things in place for us to retain doctors, keep them on for the long term in the space. So that's from the...
Yeah, thanks for that. Coming to Srini, sir, so you've already invested in a single specialty theme. If you could share with us your experience and some other themes that you assessed during the process. Also, since we have from the fertility and mother and child care right here, we could talk about that first before we go into other themes.
Thanks for that. I mean, every occasion like this, I make it a point that Rohit did not take money from me. I did say that in a couple of other instances. So People Capital, as a mid-size growth stage private equity fund, was looking at in terms of interesting investment opportunity, continues to keep looking at what are the interesting healthcare opportunities which can scale in the time frames what we have in mind, which is typically 5 to 6 years, in a risk-adjusted way which can give the returns expected. As Kaustav was saying, one can play in terms of the healthcare delivery market, not necessarily, I'm not going down the path in terms of medical equipment, diagnostics, or anything else beyond that. But specifically, if one looks at in healthcare delivery, there are ways what one can play in terms of going across and investing in multi-speciality, super speciality, large, well-established hospitals. I think for us, what made sense in terms of doing it is that, is this concentrated risk in terms of looking through that? What are the project execution risk what one can do through? In the time frames what one is looking at, how can I build a salient model which is replicable, has the growth drivers, which also propel for me to exit at the particular point of time? I think one particularly people have to keep in mind in a private equity, obviously one is interested in terms of making money. Kaustav did mention in terms of saying that they are fundamental drivers, at least on the paper, in terms of what makes single specialty to be interesting. Be it capex intensive, lesser capex intensive, lesser break-even periods, higher margins, higher EBITDA numbers, obviously copy exact. It is very similar to, in a way, a specialized retail model. With fashion retail or a lens retail today one is talking about, here too you are managing small, replicable model, multiple locations. I think the biggest thing what made it a point is the fact that it did not have a concentration risk. What it means is, if I go put it up as 700-bedded hospital, 800-bedded hospital, I'm sure all of us, as NVCs, simple things like a state bifurcation, how it has impacted some of those things. How a flyover coming in front of the hospital, how it has impacted the risk factor there. I think this was I continue to believe single specialty offers a brand salient model, a replicable model, and at least on the paper, and it is being proven by some people, and I think we can debate in terms of what are the concerns, but at least in terms of giving that higher returns in a very, very risk-adjusted way. That's what propagated us to look at this and make that investment.
So coming to the topic as to when the new age single specialty teams will break out, I'd like to ask Rohit first, as you're on the road to raise a next round of funding, how are these guys treating you? Are they treating you as a matured guy? And what does breakout mean? Does it mean that you now raise a bigger ticket size and then you go for an IPO, say, in the next 2 to 3 years?
Yep. So I'm going to dial back a bit. If you look at what we do, our core business is about delivering babies. When we started, I think the biggest battle was convincing a couple to actually give us a chance and not having to go to either a nursing home or a corporate hospital. So that was the divide that a customer had as a choice. I think over the last few years, this point has been driven home completely. I don't think that is a concern anymore. I think anyone where there is a choice of a single specialty on mother and child, I think that comes as top of mind recall as against a corporate hospital or nursing home. So I think that has been the biggest thing about. So when you say breakout, I think making sure people accept this as a proven mechanism of single specialty care, I think that's a big achievement. Right? So, I mean, if you look at it, we don't have a third way of bringing the baby out. It's the same, normal versus C-section. The proposition had to make sense. And it took time, it took scale, it took energy. It took a lot of investments from, not just my investors, others as well, to show that there is confidence in the system. Right? So what that has helped is the ecosystem has developed. There's a lot of clinical talent which now believes in it. Even as customers want to believe in it, I think the clinicians giving us that vote of confidence to say that, yes, this is a model I believe in. I get all the, necessary, let's say, medical infrastructure or fallback options, what I would have got from a multi-specialty hospital, to having the, the personal touch from what a nursing home would have perhaps given, right? So I think this combination has worked really well. And in terms of how people are looking at this proposition today, I think we've already proven, exactly like Kaustav said, what is the unit level economics, right? So our oldest unit is more than a decade old, right? So you can't get a better set than that from a unit which just started last month. So we have, a broad spectrum possibility of review in terms of how new units will do, how old units would do. So I think that is, people are looking at it keenly in terms of how things can shape up, right? So exactly to what they said, on exit proposition, if somebody has to say, okay, what can this business actually do? We've already demonstrated on what is that which is going to happen. So I think we are being looked at as a slightly mature company, though I'd like to think that we're still a startup. But if you go back to the numbers, we will look like a mature company. I think some of the decisions, we've gone into a cookie cutter mode where we don't debate about certain aspects anymore. We just know that this is what it will be, and so there's no time spent there. And beyond that, this has given us a lot of room for innovation now, right? So investing on technology, people, whatever it may be, to help then rise to that occasion. I think that has been a very useful thing for us to do. So people have now started seeing it and appreciating it.
Cool. Coming to Kiran, if you could, so we've seen very few deals in the fertility sector. After you raised money from investment, we haven't seen any, though there are market rumors that one big ticket size deal is expected to conclude. But this segment is also extremely highly regulated. When do you see the segment reaching its inflection point?
I'll start with saying, when we started in 2009, 1 in 9 couples had some problem with infertility. Now, there is some degree of problem in 1 in 4 couples. So the demand's there extensively, but the supply is not there in terms of matching it. Clearly, we see a big gap in the key resources that are needed, which are the clinicians and the embryologists for this to actually deliver the treatment. In fact, with the private equity coming in, we have launched a school for embryology and reproductive medicine, and we are building it ground up. For scaling up, typically there are 2 ways that we can do it. One would be to actually build the skills for the doctors and embryologists, and second thing is hire, or recruit star doctors. We have actually chosen the first model. We want to, if it takes time, it takes time, but we don't want to compromise on that part of the quality. It's extremely important. Unfortunately, we've been seeing in certain cases in tier 2 towns where, they're existing nursing homes and then they're extending it into an IVF facility. I mean, within an existing building, the kind of quality that's needed for the IVF lab, and it's not there, and it's very concerning for us. So we believe that, the quality is of extreme importance in this case. While we continue doing that, we really want to create a much larger awareness levels. See, in terms of the patients that we get, one would be word of mouth, but there is also the word of mouth that actually comes from the medical fraternity itself. So the patients actually go through a lot before actually coming for a fertility treatment. See, so when the doctor actually advises them, they need to advise based on all these different factors. And for us, that's been the differentiator big time. We are not necessarily don't want to be the market leaders, but want to be the most respected player as far as, advanced fertility treatments is concerned. And we do offer that currently.
Coming to the broader picture, this question is both for Kaustav and Shunisa. So which of the single specialty themes do you think have matured over the years? And which single specialty themes do you think fell off the wayside?
I think the way I see it is there have been 3 phases in terms of the single specialty evolution in the market in India at least. I mean, let's not forget we had a listed company in single specialty in India almost more than 10, 12 years back, which is Agarwal High Hospital, right? So there was a first phase of single specialty, which was dental and eye care. The second phase where Rohit already mentioned in terms of mother and child care, in urology, a little bit in nephrology. While these were interesting models to come through, I think the biggest problem, but for folks like Cloud9, credit to them, who have scaled up, I think most of them are struggling in terms of becoming interesting enough from a size perspective. I think that's very interesting to look through in terms of surgical, clinical, procedure-led single specialty hospitals which have come through in the phase 3, the way I call it, which is in oncology today, where we have listed company, we have a cardiology, again we have a listed company, we have something like an ortho, where interesting models are coming through. I think that this is also interesting from an investor perspective, given the fact that it gives an opportunity for somebody like ourselves and quite a few folks in the audience to go and invest sizable amounts. It's no more where it is getting spread across only 1 million, 2 million, but there is also an opportunity to put a little bit of a scaled money with an intention in terms of becoming relevant and having an exit proposition. I think the different concept, if I may say so, are two other things which are interesting, which is related diversification. I think Rohit again has demonstrated in Cloud9 in terms of what does it mean beyond going in a related way, in a balanced way, without compromising the focus beyond mother and child care in terms of getting into pediatric or a gynec. Very similar to what you're seeing in some of the nephrology, urology combinations coming through, cosmetology and skin care coming through. I think that's an interesting concept in terms of from a size perspective and the best known practices which can be can seamlessly flow. And the third one, which I will say, the last one which I'll say is interesting concepts which are coming from an investor's perspective of consolidating at a operating at an investment company level. I think Vishal is doing a fantastic job in terms of trying to put together single specialty hospitals as a holding company structure where cancer care, mother and childhood and other single specialty hospitals are coming together. That's an interesting, again, a development in the market because it opens up lots of avenues from an exit. Even today, an IPO becomes a credible exit or even attracting serious large-term money including sovereign capital to come through that. So I do see that there are interesting developments which are happening in the industry.
Vastav, a quick take there. Quick take.
Okay, so largely agree with what Srini said, but for me, maturity in single specialty is really dependent on how well proven are unit economics. Not only in your core markets, but across a whole different variety of markets, metro, tier 1, tier 2, core states, non-core states, and all of that. And interestingly, so if you look at something like eye care as an example, right? It's been there, done that, proven unit economics for a fairly long period of time. But some players in that space have also had issues proving the same kind of unit economics when they have stepped outside of their core market, right? So when I look at single specialty models, obviously, all of these models are going through different stages of maturity. There are certain specialties like dental where the basic unit economics itself is yet to be established. There is something like eye care where the box level economics is well established, but we are really asking ourselves, can that be replicated now in new markets, in non-core kind of markets? And then you have, something like, IVF, for example, which is going through a whole innovation cycle. It's essentially going through an inflection point in terms of, some of these players being able to reach out to a market or a target segment that was not thought addressable at all, even a couple of years back. So we've got examples of players who have been able to play on this proposition of a much better value delivery to the patient segments, and therefore they're being able to go after the middle class, lower middle class, segments of the socio-economic spectrum, which was unthinkable even a couple of years back. Cancer, for me, it's very interesting. Once again, it's an evolving model. My 2 bits on cancer is that you will see more of shop-in-shops, going ahead, because traditionally, the play that you saw in the Indian, oncology space was really of asset-heavy, standalone hospitals doing end-to-end cancer care. Okay, from that, we are really gravitating now towards a model where you will have a shop-in-shop box inside of a hospital. What that really does for the investor is that it basically makes the model more capital efficient. You still provide comprehensive cancer care, all 3 modalities of treatment inside of that box, but essentially you have a partner on the other side taking care of the civil infrastructure, the diagnostics, which is both radiology, pathology, ICU, OT infrastructure, which is something that you don't have to invest in. And then you essentially have a revenue and profit sharing model playing out. Now, this is something that has actually already played out in a big way in other markets, like in the US, and it's now kind of, taking shape in India. As depressing as it sounds, if I look at some of the cancer-related work I would have done 5 or 7 years back versus now, I do get the feeling that, the overall disease incidence and prevalence is completely going through the roof, right? So from a market addressability point of view, you will increasingly have a very large market to play to. And you can't play to that market only with a very asset-heavy, end-to-end, greenfield hospital model. You have to kind of innovate in a way similar to what I just described, which is, essentially shop-in-shop, sitting inside of existing hospitals, offering quality cancer care. So different single specialties are essentially going through different stages of their breakout or maturity.
I'd actually like to add to what Kaustav said. In fact, it took us some time, but we have now but we cracked the model of having an upmarket center, let us say in a tier 1 city, to another one which is actually as a shop-in-shop within a tier 2 city like Warangal. Both of them are working very well for us. But it has taken us some time to understand the market dynamics there and, to get to that point. Yeah. Thanks.
We're running short of time, so we'll have to do a quick take on this. The final section where we'll talk about what next for Cloud9. Will you go and look at in the tier 2, tier 3 regions in order to expand your customer base? Though in the earlier panel, one of the panel members said that regionalization is the key to success. So what are you doing there?
Yes, Joseph. So just building on what Srini sir and also Kaustav said, I think, especially with mother and child, I think about few years back, this was like in the case of other single specialties, I think it was the flavor of the day. More people wanted to get in. More people said that it looks greener on this side. And, I think that has been dealt with. I think I would be very surprised if someone comes about with a scalable proposition at this stage. So which means that we have a good consolidation opportunity at this time. There are a lot of players who set up single units in different pockets across the country, which are all now, they don't have a way out, right? So for good or for bad, these guys started with a proposition, but it did not pan out as well as they would have thought it would. So I think this plays really well. For us, especially at Cloud9, I think there are 2-3 aspects that we are focusing on, and one is clearly we don't want to deviate from our core proposition of going deep in our markets, which is, so we are right now in the north, the west and south, and we will continue to go deeper in these markets because the network effect of having presence there is it's just off the charts. Having said that, we are at a stage right now, and exactly for the reasons that all of us discussed, I think there is some very interesting opportunities which have come about across the country, from collaboration prospects, from starting with good inorganic opportunities to, I think we are seriously looking at some of these aspects. Probably a year before we wouldn't have considered. I think it's at a good stage to actually see this. And of course, Kiran's here, but I think fertility is a good focus for us. So it's about 15-18% of our business today. We're doing a significant capital commitment to try and see how soon we can grow this, because it's really added value. And as Srini sir said, it's a good backward integration from us, not deviating from the core focus. It's still very salient to what the brand stands for. So and of course, we're running out of time, but one quick thing is that how we want to leverage technology. I think we've done significant investments over the last 3 years. These will start yielding results, and it's a very interesting space there.
And what about you, Kiran? What next?
For the next 2 years, I think we have 2 streams of growth. While we'll be, we typically for each center for us to start it, we actually go a little deeper in terms of the expertise that we build there. So it's about 9 to 12 months. So we have sort of 3 centers parallelly running at this time, which will probably get up and running so that will be the greenfield aspect of it. Beyond this, in other geographies, it's been attempting a lot of, inorganic acquisitions. There's either a culture mismatch or sort of doctors coming on board. So I think it's still a bit early on that front, but we are very keen on looking at a 4 or 5 center acquisition in other geographies, but greenfield is going to be our main focus, and I would see about 20 centers in the next 3 years. That's definitely the focus for us on the fertility side. Yeah.
And when we talk about private equity funding and single specialty, we cannot not talk about exits. So from the two of you, is 20 to 30% kind of internal rate of return achievable for private equity firms from single specialty teams?
I think in general, if we are saying healthcare delivery will achieve that sort of returns, single specialty, I believe, has better chances of making that than the larger ones. Larger ones gives us opportunity to put a higher check in a maybe slightly more risk-adjusted way with a slightly lower returns. That's why I keep saying, at least on the paper, single specialty have better interesting investment metrics. It is absolutely, I agree with Kaustubh, some of the models have not worked. And there are fundamental reasons. Again, I keep going back, the misused word, execution is the most important. We've made mistakes in our own investment company. I'm sure Rohit will agree. All the cities are not the same. Just because you worked well in one city doesn't automatically become in the other city you will be able to execute that. It is a project execution skill. Single specialty hospitals, as much as I'm putting multiple things, I need to have an extremely strong back-end structures in place. It is in terms of branding. It is in terms of replicating the model from city to center, and having that rigid focus on the profitability. I think very, very important. From an exit perspective, as I said, it's interesting to look through some of the trends which are happening, which is related diversification, consolidation in one particular way. And it is not as if single specialty is the only way to go. There will be multi-specialty, super specialty hospital. There will be single specialty hospital. It is for each one of the entrepreneurs and investors to pick and choose what makes sense for them.
Kaustubh, are you positive about exits?
At a very broad level, I am, and I'll tell you why. Because if I once again look back upon how some of these single specialty models were really being managed, let's say about 5 years back, versus some of the very recent work that we've done over the last 1 year, I think the degrees of freedom in terms of really impacting unit economics in a single specialty box are far higher than what you would typically, find inside of a multi-specialty hospital setup. Okay, and I have seen some of this, innovation coming through by way of, how people are doing their patient funneling, okay, for IVF, for eye care, okay. Some of the recent eye care work that I did actually, told us that in tertiary single specialty setups, conversion levels for cataract were going up to around 30% plus. Okay, of all new OPD footfalls, which was unthinkable even 5 or 7 years back. So essentially what I'm trying to say is that some of these players they're getting smarter with respect to how they do the patient funneling, how they do the conversions, how they actually manage the cost efficiency of the business. Because now with increasing network effect, there is an opportunity, especially in elective surgeries, for you to actually sweat your resources, your human resources clinicians, especially across both hubs as well as spokes. So that kind of lends you a certain level of cost efficiency, which would not have been there, let's say 5 or 7 years back. So overall, therefore, those factors coming together, I do get the feeling that yes, I am positive about exits and about the kind of returns that you just mentioned when you were asking Srini. Interestingly, consolidations and the next round of private equity investment, those are no-brainers, right, as exit options. But for a couple of single specialty models, very interestingly, I am seeing interest from global players who have not been in India so far. Right, and we are speaking to one of them right now, and they are coming and asking us, okay, how are pricing levels going to trend in India? I mean, especially with Ayushman, with pricing control for the given single specialty that they're thinking about. But I mean, given that you're already working on the lowest pricing levels, how is it that people are still making money? And they are then going taking it back to their board, their investment committee, to essentially say that don't actually get swayed by the fact that you're essentially working on extremely low pricing levels. There is still a way for us to make money out of every box and at a network level. So that is increasingly also coming through as a third option for exit as we go ahead. But that's not true for all single specialties, maybe for a couple of them.
Thank you so much.